It's time now for a strategy session. November CPI data coming in line with estimates, but the lingering threat of inflation does pose some risk to Wall Street's bullish outlook for the stock market. Let's talk about that. We have our very own Josh Schaefer. And Josh, I guess how big of a risk, or how should investors be assessing that risk as you take into account some of the look-aheads that we've got?
Yeah, so we've been talking for about a month now about the 2025 outlook generally being bullish, right? Most strategists see somewhere from 64 to 6,500 for the S&P 500, which is about 8%, up past 7,000, which would be a 16% rally. So overall, there aren't a lot of bears on the street right now. But one of the top risks they're talking about is inflation. And it's because when you look at that CPI print today, you're not seeing inflation make a lot of progress right now. That is just kind of the net of the last 3-4 months of both CPI and PCE, economists calling inflation going sideways. And the question is what that sets up going into 25, right? Excuse me, part of that could be, does the Fed not cut in 25? Now, strategists would tell you maybe that's not an issue for stocks. If the economy is doing well, maybe we don't need Fed rate cuts in 2025. But that, again, puts more pressure on the economy doing well. It also might move rates higher right now, right? So if you're looking at a 10-year right now in the 4.2% range, some rate strategists would argue maybe it's actually in the 4.5 to 4.75 range. You missed some opportunity there, right, if you bought the 10-year at 4.2%. When you think about it from a stock perspective and potentially this Trump trade, one thing that the team over at UBS Asset Management was telling me yesterday is, well, what if Trump knows that inflation being high obviously isn't good for the American consumer, and part of the reason he was probably voted in was because the incumbent party was there during inflation, right? So what if he doesn't do these tariffs? He starts to realize maybe the tariffs aren't a good idea if we're still not really getting inflation down like we want. Well, what's the trade been in the market for the last month, right? It's been a Trump trade of tariffs, people sort of betting on the different policies. Maybe that impacts some of this, and maybe it also impacts one of the other consensus calls, which has been for U.S. exceptionalism. If the U.S. is going to put tariffs on everyone else, the theory is, well, that will hurt European economies, that will hurt emerging market economies. Maybe it won't actually hurt them as bad, and there's chances for opportunity outside of the U.S. stock market is one other option. Again, this isn't a lot of people's base case necessarily, but it is something I think that people are going to be continuously talking about as we get into 2025 and if these inflation prints don't get any better.
So all that considered, it seems like one area that there is a ton of consensus continues to be within financials right now for next year, because one of the other policies that is talked about is just the sweeping deregulation that is expected, and as evidenced even more so by the now selected FTC person that Trump is going to be bringing back into, well, it's already within the FTC, but now going to be elevated as commissioner.
Yeah, Brad, that's definitely a consensus call right now. It's hard to find a strategist that isn't overweight financials, it feels like, right? We know they all come on, they list about 3 or 4 sectors that they like. Seems like everyone likes financials, and I think that's because, as you were just saying, the deregulation aspect there isn't necessarily at risk from the inflation concept that I was talking about, right? That seems like something that Trump could do perhaps either way. Yeah. I think the other key thing that is a part of this story for us is, okay, financials, but what are some of the other sectors people are overweight right now? It's a lot of cyclicals, right? It's a large bet that the U.S. economy and the trend that we've seen over the last 3 years that the U.S. economy outperforms expectations is going to happen in 2025. Right. If that doesn't happen and inflation is sticky, it just creates a very interesting picture for both investors and possibly the Federal Reserve, right? Because if your economy is weakening, the labor market starts weakening, one would think rate cuts. But if inflation isn't making progress, can you confidently make rate cuts and bring inflation down? That seems like, while we're talking about inflation being sticky, again, the economic growth aspect of this also remains super, super key.
And that's what has made this entire last several years, just in terms of Fed policy and how complicated the current dynamics are right now within the economy. When you take a look underneath the hood at some of the driving factors, I think that very much just illustrates how tough it is for the Fed to best gauge, and why we have seen so much discussion and so much, I don't know if I'd say disagreement, but I think very lively discussion and commentary from Fed policymakers over the last several quarters in particular that show varying views just in terms of what should be done, what's necessary, and really how much progress has actually been made ultimately on inflation.
Yeah, there's just a lot of fog going into 2025, right? I know strategists are using that word, and it's sort of, but I think it's a true word, right? And I was speaking to EY chief economist Greg Dacko before he came on earlier with you guys, and we were sort of talking about, well, why are they still cutting in December, right? And it's maybe just to finish out the path that they set forward on this year. The Fed finishes out with this cut in December, gets to closer to neutral where they wanted to be to end 2024, and then you just wait for all the variables to come in 2025. A lot of things can certainly change in 25, so maybe you do one more cut, and then you say we're going to be gradual and data dependent, and no one likes to hear the data dependent word, but I think it matters a lot going into next year when we're talking about all the things that can impact this economic data. If there's one thing that's clear, inflation isn't falling like a rock like it has been at points over the last 2 years. And so where it is going to head is a big, big question.
Yeah, I got a note here from BlackRock as well, saying they encourage consumers who are sitting on extra cash to participate in the market to avoid losing out to inflation. So it's starting to play in a little bit.
Inflation isn't always bad for stocks. That's
not.
definitely something we've learned over the last 2 years, right? And something to keep in mind.
Josh, thanks so much. Appreciate it.